All right, hello, good morning, good evening, and good night. I hope you guys are doing absolutely fantastic because today we're going to be talking about PYPY and PayPal because I recently bought more PYPY shares, the Yieldmax ETF, which tracks PayPal. The reason being is because the underlying stock PayPal was down almost 20% the other day. I think it was about, or maybe not 20%, maybe about 15% to be exact. It was at a current valuation of about 90 US dollars and then dropped all the way down to about $77 on the day. So we're looking at about a 13 to 15% drop on that date. And in that time period, I bought some more PYPY. So what I want to talk about in this video is why I bought more PYPY, why I think this was an uncalled for drop within PayPal's stock. I want to go over their fourth quarter earnings result to show you why. Wow, they are still a very strong company and they posted very good results. There's no reason for this, and that is why I bought. And as well, they also produce a 35% dividend yield. So this is a potential opportunity where I see a great capital gains approach as well as a 35% potential dividend and more to come. So if that does sound good, currently what I'm going to do is I'm going to scroll in here as we are up to 7,386 subscribers, 326 subscribers in the past 28 days, not 28. Maybe two of you could subscribe and then we'll join, and who knows, we'll go from there. Anyways, so what I want to talk about is PYPY. Full disclosure right here. 43 shares at an average share price of $16.21. Gonna brighten up the screen a little bit. So 43 shares at $16.21. I'm currently up very slightly on that position. As you can see, we're at $16.26. I bought at $16.21. So not much of an improvement there, but PYPY was up on the day about 1.75%, which is awesome. So PYPY tracks PayPal. Why did I decide to buy more? Well, the reason being was because the underlying stock PayPal fell about 13%. And you can see here, that is a huge drop. This drop is seen pretty much throughout the past year. This is the worst drop in PayPal's kind of like day-to-day chart over the past year. You can see this drop right here, which occurred on February 4th. So why did PayPal drop? It was due to their earnings. Surprisingly, their fourth quarter earnings dropped their stock. Yet PayPal reported adjusted earnings of $1.19 per share, beating estimates of $1.12 per share. So PayPal actually beat earnings estimates. They produced great revenues of $8.37 billion, which we'll get into in a bit. I have their financials up, so I want to go through that. PayPal beat earnings, and yet their stock reacted negatively to this, and it reacted in a very negative way, down 13%. And of course, I believed in PayPal way back when they were trading at a $90 valuation. Why would I not buy them if they're only continuing to show strong signs of growth and they are now at a better price point? So that is why I bought 43 shares more of PYPY. This is pardon me. This is the best opportunity that I've seen so far. In terms of if I'm looking at YMAX or I'm looking at SPXL, for example, PYPY just kind of happened and popped out of the blue, so that's why I bought more. So to kind of dive in a little bit here, what I want to show you here is their earnings per share. They came out as $1.19. They were expected $1.12, so that's 7 cents over the expected earnings per share. And then as well, revenue beat by about $110 million right there on revenue. So that is also fantastic. And it mentions here, it kind of goes into another couple things which I really like about PayPal stock, which is why I bought more PYPY, because of course PYPY performs exactly how PayPal does. It just produces a dividend where it's synthetic cover calls. It's the Yieldmax ETF. If you want more, we have a lot of videos on explaining Yieldmax ETFs. But for this video, to kind of switch a lot of tabs here, PayPal also announces a new $15 billion share buyback program. Well, this is a $78 billion stock with a lot of cash. And I'm going to go over this in a second, but they generated almost $6 billion in terms of free cash flow over the past quarter. So $15 billion for a $15 billion buyback for a $78 billion company is a huge buyback. This should in turn really help to grow the stock price of PayPal. because of course, as the underlying company buys more, as more PayPal buys and has more internal owners, you become a big percentage owner of the existing outside shares. This means that your stock price is likely to increase, meaning PYPY is likely to increase. So awesome. This is great news. A $15 billion share buyback program. You can see as well, revenues increased about 4% in the quarter from about 8 billion to 8.37 billion. They also increased their number of digital payments in terms of money moved on the platform from 437 billion to about 438 billion. It's not a huge jump there, but really it was all around good for PayPal in terms of their earnings, except for their stock price. And when that happens, we buy more. Now to kind of go into their financials, which is something that I really love to do, we compare the third quarter of 2024 to the fourth. So in the third, you can see they drastically increased their total revenue from 7.8 billion to 8.3 billion, which is what we love to see. We want to see a company growing over time, which is what they're doing. Their cost of revenue slightly up about $300 million. And then when we go here, we look at their operating income. Their operating income has increased quarter over quarter. That's something that we want to see. That's awesome. That means while their company's operating, while they're in operation, they are producing more and more cash flow every quarter. So we go to their balance sheet. The best kind of look at this is quarterly. Their total assets actually dropped. Their total assets dropped about $2 billion to $81 billion. Still great. You see their total liability is sitting pretty high here at $61 billion. It's not high, but because the real total liabilities that'd be high would be if it would be over their total assets. But 61 billion is not something to ignore, of course. We look at their total debt. They have about $10 billion in terms of total debt. And then when we look at their free cash flow, so the reason why free cash flow is so important is because this is the cash left over at the end of the quarter from the business. And when we look quarterly, you can see they had free cash flow of about $2 billion. So that means they could roughly pay down the $10 billion worth of debt in about 6 quarters, so a year and a half. That is awesome. That's a company in good financial position in terms, this is of course not financial education, this is for entertainment purposes, but I'm sharing my opinion. So you could see here, quarter over quarter, they're growing their operating cash flow. They are, it looks like, not reinvesting at the current moment. It looks like they're taking out of investments about 2.5 billion, but you could see here, repayment of debt, they're repaying down their debt about 1.25 billion over the last quarter, which is the biggest debt repayment in the past year. Of course, what we love to see, free cash flow growing quarter over quarter, and then in terms annually, we love to see that it's growing as well. In terms of the full fiscal year, we've seen $6.7 billion in terms of free cash flow from PayPal. This is an $80 billion company producing about $7 billion of free cash flow. That is awesome. So it's kind of full review on why I bought PYPY. It's a great opportunity in my personal opinion. Of course, I'm just showing you the signs here. They're doing a great $15 billion share buyback program, which is awesome to see. They beat their earnings. Awesome to see. Their earnings were already good. They could have stayed on par, but yet they beat them, which is great. And their stock price dropped about 15%. So that is why I bought more PYPY. Hopefully this position of PYPY will produce me this 35% dividend yield and higher as the shares increase in value, but as well will increase in terms of capital gains. Hopefully you would like to see us get to the previous price point of about $18, and these 43 shares purchased at $16.21 are going to significantly help that position, which my total position now is 125 shares at an average share price of $17.48. Still have a long way to go, but maybe we'll do some more buybacks soon. I'll keep you guys posted. If that sounds good, subscribe. We're up to 7,386 subscribers. It doesn't cost you anything to subscribe, but you may receive some higher dividends if you do by following our channel. If that does sound good, you guys know what to do. Please do take care, and I hope to see you guys in the next video.